Hello and welcome to Forever Cash Life Real Estate Podcast, where we talk about cash and cash flow, particularly with a focus on land flipping and how to make cash and cash flow from land. In today's episode, I'm going to lay out how you can get to $250,000 a year income, and we're going to actually break it down into the daily, weekly, and monthly steps that you need to do in order to get to that income in a matter of 1 year. All right, so with that, let's get started in just a second.
Welcome to the Forever Cash Life Real Estate Investing Podcast with your hosts, Jack and Michelle Bosch. Together, let's uncover the secrets to building true wealth through real estate and living a purpose-driven life.
All right, so here we are again. So let me first get in and let you know that the episode that we're going to do it today about basically re-engineering how to get to $250,000 or more. You can do the same things, just double them if you want to get to $500,000 or $1 million. And we're going to do that. The reason why we do this is that this episode, a similar episode as I think episode number 23 or 24 of the original podcast, has been one of our most best received podcast of all times. So because back then, though, the podcasts were all audio and now they're video, you have the double benefit of actually seeing me move my hands and stuff like that. Plus, if you're watching this on YouTube, where we all post our podcast episodes too, you now for the first time have the opportunity of seeing me explain exactly how that works. So here's the thing, $250,000. So why did I pick that number? Because it's a number that, in my opinion, is high enough to get people excited and low enough for people to be realizing that they can actually achieve it. Right? So if I say, like I did a long time ago, I asked in my team, in our team, I asked around, like, what's your number? And the question was meant to say, like, in television, they do like retirement kind of things. They talk about what's your number and what is your retirement number? How much do you have in the bank or in net worth or so in order to be able to retire? And one of the ladies said, like, well, I would like to have $10 million. And it's like, it struck me as a random number. And as I asked a few more questions to that particular team member, it became clear that it was truly a random number that had nothing to do with the reality of being able to sustain a family on. Right? So instead, what I want to do is I want to teach you, in essence, the concept of taking a goal and breaking it into pieces and scheduling them out and realizing that you can, if you can think in that way, that you can basically break anything apart and make it possible. Any goal now becomes achievable. So it's a high goal that I set for this podcast, but I think we can achieve it. So therefore, the goal is not, that's why I picked the number 250,000, because $250,000 a year in income is a number that I think almost everyone would be comfortable with. And at the same time, it's not this pie in the sky $10 million kind of thing that nobody knows how to get to. So let's take $250,000 in active income. And then perhaps we do another episode where we talk about $250,000 in cash flow, or perhaps I weave it into this one a little bit. So let's talk about the end goal. 12 months from now, the goal would be that you have made $250,000. So, okay, if we do this with our land flipping method, following our www.landprofitgenerator.com method, then I can tell you that the average profit one of our students is doing is anywhere around, let's say, the $8,000 to $10,000 range. Now, that's the average profit. If you do average deal, it means some deals have $3,000, some deals have $30,000 in profit. So, but the average is $8,000 to $10,000. So let's pick $10,000 because it makes for easier math. So in other words, that means that if you want to do $250,000 a year in income, you have to do 25 deals in a year. So first we need to take the big number and break it out into units of the thing that we are actually doing. So if you have a goal of making a $500,000 income or $250,000 income in selling industrial sewing machines, and you know that each sewing machine costs $5,000, then you know that your goal is to sell 50 of those machines, right? So now you have the next factor in that thing is, let's go back to our land, the average profit, let's say $10,000. So the next part of that is, that means that now we need to look into how many weeks do we have of the year. So in the year we have 52 weeks. Let's say we take a few weeks vacation. Let's round that down to 50 weeks because over Christmas and holiday nothing happens. So let's say if we operate this business for 50 weeks of the year and we need to do 25 deals, that means we need to do a deal every 2 weeks, right? Every 2 weeks a deal needs to be able to come in, and every 2 weeks we need to be able to sell that deal with an average profit of $10,000 a month. Now that drives us now into what kind of neighborhoods we need to go in, what kind of areas do we need to focus on where we can get deals that make us $8,000 or $10,000 a deal. So first of all, there is in the land flipping area that you can do land flipping anywhere in the country, anywhere in the world for that matter, but particularly in the United States, it works everywhere. So where there's land, but there's land in very much different price ranges. For example, there's land that is only worth $3,000. So if you focus on that kind of land, a lot of the rural areas of the United States in the South and in the West, they have that kind of land. Also in the Southeast, there's lots of these kind of properties around. So if you focus on those, you will not get to $250,000 by doing 25 deals or doing two deals a month, basically, or one deal every 2 weeks. And because your average profit will only be $1,500 a piece. Now, if you're happy with that profit, then we need to change the number. So we can skin this cat from a totally different direction. We can restart this entire analysis and say like, well, let's focus on the kind of property we want to do. Well, if your comfort level is in the $3,000 to $5,000 profit properties that you buy for $600 and sell for $4,000 or $4,500, so you make, let's say, $4,000 profit. But if your average profit is only $4,000 and you want to do $250,000, then I got to use my calculator for that. But in essence, then you have to do $250,000 divided by $4,000 per deal, is you got to do 62 deals, 62 and a half deals in that year. So in other words, you now have to do a deal every about 5 days in order to get to the $250,000. Right, so you choose which price range you're going to be, and you also choose your financial goal. Right, so therefore, if we go for the average deal, which our students do from anywhere between $4,000, $3,000 to about $30,000, that's like the average range, and with some of them being smaller and some of them being the $50,000 to $100,000 range. But if the average is in that, and the average of that becomes about $10,000, then our numbers make sense. So first of all, though, we need to therefore focus on areas that has that kind of an expected profit margin. And usually that is areas where the value of the properties is no lower than $5,000, and probably no higher than $100,000, because that's where you make those kind of a profit. So then, now that we have that, we have identified the kind of areas that allows us to go look into the market and look at do we do. Let's just pick an area. There's an area in Arizona called Navajo County, and the northern part of Navajo County is really low value properties. There's an entire few square miles where properties are literally only worth $1,000 for an acre. An acre and a quarter is worth $1,000 or $1,500, and you can even buy them at tax sale for $500 a piece. So you can sell them for $1,500, perhaps even sell a financing for $2,500. But your profit margins are not where they need to be in order to make this example work. But in essence, what you do is you break it down into those pieces. Now, the next part is, if we now know that our average student gets a deal for every, let's just say 400 to 600 letters, let's round that, let's average that out to about 500 letters. So if our student gets a deal for every 500 letters they send out, and if we also know that we need to get about, for every 25 to 30 offers we get a deal accepted, we need to basically send out enough mailings to get a 25 offers in, and then over the scale, it will revert back to the average, and then we get a deal for every 25 offers. So let's say, therefore, if we get a 5, and let's say a low percentage response rate, in some markets you get below that, in so many markets you get above that, but let's just say we get a 5% response rate, which is, by the way, still 5 times as much as the house flippers get. And many of our land flippers get 10 and 15% response rates. But let's just take a 5% response rate. And if we send 1,000 letters out, then we should be able to get 50 phone calls, make 50 offers, and get 2 deals from that. So now if you get a 10% response rate and your offer ratio still holds true at about 25 or 30 offers per deal, now that case, you probably can send out only either a little bit less letters to get to the same number of deals, or you get to your same number of deals quicker. So in other words, let's say you're getting a 10% response rate and you're getting a deal for every 25 offers that you make, which is somewhat average, but of course, it's not a guarantee, guys. If you were listening to me here, we have guys that do get an offer accepted for every 16 or 17 offers they make, and we got guys they get an offer accepted for every 50 properties that he accepted. That all depends on how much follow-up you do on the offers and how elaborate your offers are, and so on and so forth. And there's much more detail about that in the www.landprofitgenerator.com program. So the point here is now, let's say that we assume right now that we get a 10% response rate and that that 25 offers thing still holds true. So therefore now, when we send out 1,000 letters, we get 100 phone calls. We make 100 offers, we get 4 deals accepted. So therefore now we comes to the point we need to pace our mailings. In order to pace our mailings, therefore, if we need to get to a deal every 2 weeks, right? And let's say that's the month that actually doesn't have 4 weeks. The month usually has like 4.3 weeks or so. So that means that basically it doesn't matter, every 2 weeks. So that means every 2 weeks, we need to send out enough letters to get 2 deals. Now, if 2 deals in this case happen on 250 letters already, then we need to send out 500 letters. If we get 2 deals based on 500 letters each, then we need to send out 1,000 letters. So basically, depending on which area you operate, and at the beginning, we do a quick test phase when we come into this business. So we first test a few counties, test our response rates, then we hone in on the ones where we get the biggest bang for the buck. But as we do that, you're going to be somewhere in that range of like having to send out 1,000 letters for a couple of deals, or 500-600 for a couple of deals. But let's say it's 1,000 letters for 2 deals. So if you need to do two deals, right? It's 50 weeks. You need to have 25 deals. You need to do 1 deal every 2 weeks. That means in other words, you need to send out 500 letters every 2 weeks in order to get 1 deal. Now again, this is a low number example. And it might very well be that the market that you're in, those numbers have to double. That you might have to send out 1,000 letters every 2 weeks, 500 letters a week. Once you honed in to your target area that is shown in the test phase to already bring you some results, right? This is not for the first month or 2 months of you doing that. This is usually after you have done some testing of different counties and you found your sweet spot already. But then once you found your sweet spot, you want to go and you want to drop them very consistently, because if you know that on average you get a deal every 2 weeks by dropping about 500 to 600 or so letters every 2 weeks, then you can know that if you send out about 1,000 letters a month, you get to 2 deals a month. Right? And if you do 2 deals a month, that's 24 deals a year. That is very close to your target range. Now, at the same time, and that's when you start going, right? So you spend your first couple of months testing this, and then as you then hone in on your sweet spot, and then you see the results you're getting, and you see that what the profit margins is. If your profit margins end up being lower, more in the $4,000 to $6,000 range, then you probably want to crank up the mailings, right? So that you can catch up over the course of the year. Also, if you spent the first 2 months testing different counties and testing different response rates and so until you find your sweet spot, in order to get to your yearly goal, you got to accelerate a little bit later. You got to catch up, because you basically in the first 2 months you might not have gotten a deal yet. You might have gotten only 1 deal or 2 deals under contract in the first 2 months. So you're kind of behind, right? Because you're kind of a few deals behind. So therefore, as you figure this out and put in your systems, you got to now accelerate a little bit more and have a few months where you get 3 or 4 deals in that month, so that you can leverage out to the level that you need to, or you can accelerate out and average out to the level that you need to be there in order to make it to the $250,000 a year. And just to remind again, if your profit margins are lower, then you need to have more deals per month going. If your profit margins are higher, then obviously you don't stop, right? You just go for a higher dollar amount. You adjust your goal. Now your goal might not be $250,000 a year anymore. Now your goal might have accelerated to $300,000, $400,000, $500,000 a year if you consistently get $20,000 deals. Because then you just go and get two $20,000 deals a month, and now you're making $40,000 a month. And then after 12 months, that's $480,000 in profits. So you can get there just as well. But the key is to monitor, is to break down your end goal into what that means in terms of response rates, what that means in terms of area, and then therefore what that means in terms of letters that you need to send out and responses. And therefore also, now it's going to a level deeper, it means that if you get 50 offers, you need to ask yourself the question, does your current life situation allow you to analyze 50 properties a month? Right, because if you get a deal for every 25 offers accepted, right, and now you send out 25 offers. Well, before you send out the 25 offers, you got to analyze those deals. So, do you have the time to analyze 25 deals every other week? So that's 12 and a half deals a week. Can you analyze 12 and a half deals a week, or are you running 3 jobs and so on? And if you're running 3 jobs, perhaps the better way would be to go into a higher price range, and then in the higher price range, send out perhaps more letters, get fewer responses, fewer analysis, but therefore, when you get a deal, you make like $40,000 or $50,000 a deal, in which case you only need 4 to 6 deals in order to get to your 250, or 5 to 6 deals in order to get to your $250,000 profit. So there's a lot of moving pieces, but you got to put them in place. And in summary, the moving pieces are, again, what? It's first of all, it's how much do you want to make? Secondly is what response rate do you expect? What price range do you want to go after? Based on the price range, you select your counties. Based on the counties, you now experiment and you see the response rates. Based on the response rates, you now up or level down, or level up or level down the number of letters that you need to send out, the number of direct mail that you need to send out. And then based on that, you then send your offers, and then you monitor what your response rates is, what your acceptance rates are, and what your profit margins are. And if you see you're falling behind, you crank it up. If you see you're ahead of the game, you still crank it up, right? But if you're just tagging along and it becomes a really nice structure of doing deals, then you stay right there. If your workload is then such that you can say, yeah, I can go back to part-time in my job, and therefore I can analyze more properties, I can do more deals, then you can do that too. Or also, if you realize you don't have the time to analyze the deals, you can perhaps then start outsourcing, do the first few deals, and then start outsourcing the deal analysis to somebody else, right? To a call center, to a virtual assistant service, or to just hire a virtual assistant, or hire your kids or your uncle or your parents or whoever you think can do the job, right? So that's when you then start scaling your business. But it all starts with knowing that there's a number at the end of the tunnel. Well, usually it's like a 12-month number is a good number, and then basically breaking it down into steps. So now you know every Monday you send out letters. Every Tuesday you start perhaps you're doing deal analysis, right? Every Wednesday you make offers, right? Every Thursday you prepare your listings, and ongoing you talk to your buyers and you sell those properties, right? And you post them. Every Friday you post the listings in different places. Every Saturday you refresh the listings or look for other ones, and on a daily basis you spend a little bit time just perhaps 20 minutes or so, or when there's a need to it, responding to buyer requests to buy the property. And now you got a nice little rhythm that just takes perhaps an hour or so every night, or a couple of hours every 2 nights, or 3-4 hours twice a week, and you're in a nice rhythm of that will consistently get you towards your goal. The key here is not to send out 10,000 letters in 1 week and then be overwhelmed with 1,000 phone calls that will take months for you to process. The key is to pace yourself with looking at whether or not you're falling behind, or you're meeting, or you're ahead of your self-proclaimed goal for our financials. Now, how do we do the same thing with seller financing? Well, we're doing the same thing with seller financing. As you know, one of the ways we sell our land profit generator process properties, right, or pieces of land, is we love selling them with seller financing. And so now your goal might not be $250,000 a year. Your goal might be to get to $10,000 a year a month in passive income within 1 year. $10,000 a month in the passive income within 1 year. So how do you go about that? Well, first of all, it's the exact same thing. You figure out what kind of properties you focus on, what is the monthly payment that these properties will spit out. So if you focus on the $10,000 properties, chances are their monthly payments are going to be probably in the $200 to $300 range. So if you have a $250 a month monthly payment, that means in order to get to $10,000 a month, you will need 40 seller financing deals where they pay you $250 a month on each of these 40 pieces. 40 times 250 equals $10,000. You're now receiving $10,000 a month. Now, if your monthly payments are higher, right? If you focus, then if you want to do less deals, you're probably going to have to focus on higher and a little bit higher price deals. So perhaps you focus on $30,000 properties, which you put under contract for 5, sell with a $5,000 down payment and $500 a month. Now, if you want to get to $500, but if you want to do these deals, then you only need 20 deals a month, 20 deals over the course of the year. And that's the nice part, 20 deals over the course of the year in order to, at the end of the year, get to a $10,000 a month monthly payment. And then it's the same kind of situation. So what kind of counties have $30,000 properties? It's usually the larger acre properties in the rural areas with a larger acreage that's easily worth $30,000 to $50,000. Or it's the properties in the outskirts of town that have that are worth like an acre to 5 acres are worth about $30,000 or $40,000 or $50,000. And so you focus on those, and then you got to do some test mailing. You figure out what your response rate is. Based on that, you figure out how many offers you can make. Based on that, again, the 25 to about 35 offers per deal accepted. In some areas, it's also higher. You might have to send 50 offers to get one accepted. So you gotta play with that. It's depending on price and neighborhood and area. These numbers are, of course, all different. But let's say if you have that point where you get for every 30 deals offers that you make, you now need to basically send enough mailing in order to be able to get 60 responses a month, or 60 responses. 60 responses, because 60 responses equal 2 deals. So every 5 weeks, you need to send out enough letters in order to get 2 deals that you can sell with seller financing at $500 a piece. And that'll add every 5 weeks $1,000 to your passive cash flow. And therefore over 50 weeks, which is basically a year, it adds $10,000 in cash flow. Obviously, if your number's a little different, you monitor it. If you get a bunch of $150 a month payments in, you got to do more of those in order to get to the $10,000. And if you get a bunch of $1,000 a month payments in, you got to do less of them in order to get to the $10,000 a month. But that is while you adjust and look at as the year goes on. You go look at after a quarter, you see, okay, how many deals have I done? Usually you're just in the beginning, you have gotten a few deals under contract, perhaps some sold already. After half a year, you're like, oh my God, now this is rolling. I got 17 contracts, and now you need to focus on selling them with the right down payments and the right monthly payments. And then you take, after that, you take on a monthly basis, you take an account of where you are towards your goal. And then if you miss your goal and you only got to $8,000 a month, are you going to be mad? And the answer is, of course, not, right? You're not going to be mad. But the point is, this is how you do that, right? This is how you focus on this. This is how we do everything we do, right? This is how we look at everything. Like, it's always like a matter of, here's the goal line. Here's where we are right now. How do we get there? And how do we get there? By taking into consideration Thanksgiving and taking consideration Christmas and taking consideration our annual 4 to 6 week European or world trip that we usually do. And then we basically say, okay, we have these windows of time over the course of the year. It adds up to 20 weeks of the 26 weeks of the half a year. Let's say in those next 6 months, we only have 20 working weeks because 6 weeks we're taking off. So this means in this 20 weeks, now you basically say, in order to get to my goal, I need to do on a weekly basis, send out those many letters, make get that many offers out, and get that many deals under contract in order to accomplish my goal. And if after 2-3 months, I'm not there, I got to crank it up. But if I'm seeing I'm well there, perhaps, or I'm too stressed, there's too much going on, then you either reset your goal, or you reset the work, or you start using outside resources like a call center or something like that, or you hire coaching, right? We offer coaching, of course, that somebody takes you by the hand and guides you to that exact process, right? That's how it is. And that's the beautiful part about this. This is one of the very few things that probably were taught to Michelle and I in business school on how to properly plan, it's project management, right? You break, how do you eat an elephant? One piece at a time. How do you accomplish $1 million a year? Like a week at a time, a day at a time. But you don't let 10 months pass and then realize I still need to make $1 million in the last 2 months. You start the year in a way that, in order to make $1 million, everything we just said works for the $1 million too. If your average deal is $10,000, then you need 100 deals for the year. If your average profit that you target is $20,000, you'll need 50 deals for the year. So you got to go step up your game in areas. If you want to go after $20,000, $30,000 profits, you got to be aware that you're going to have to send some more letters in order to and probably get a little bit less responses. But then you make $20,000 to $30,000 a deal. And if you make $25,000 a deal, you only need 40 such properties. 40 such properties over a time of 50 weeks is basically every, what is that? Every, I'm losing the thing, but basically it's, you get my point. It's like every month I need to have, let's say, 3.5 deals or so, right? In order to that, after 10 months, I have like 30, 33, 34. And then after 12 months, I have my 40 deals at $25,000 a piece. So it's the exact same thing. That's how it works. That's how you break it down. And it works for the $1 million just as well as works. I mean, look at guys like Grant Cardone. They're doing it for the $1 billion level, right? His goal is to be a billionaire. So he figures out that his method for that is a certain asset class, that he needs to buy a certain number of units of that, properties a year. And we're doing the same thing. As we move our assets and as we move our money from land flipping into increasingly multifamily, we have a certain goal of financial cash flow, right? A certain goal of how much money we want to have come in every single month. That's a pretty hefty goal. And in order to get that goal done, now this is generational income, not from land flipping. Land flipping is very nice and high, but it's from the other kind of stuff. So therefore, in part of what we're doing is we do a land flipping to generate cash flow, and then we roll that over and we put it into what we call forever cash, apartment complexes in our case, that we syndicate with investors. Sometimes we do some on our own, with our own cash. But then the point is that every single one of those ends up bringing cash flow. And so we know how many we need to do in order to get to the financial cash flow goal that we want to get to be done, in a sense. It's a fun goal to pursue. We're already financially done for many years, but it's a fun goal to pursue because we love the actual subject matter. We love dealing with that in any kind of real estate. So we set this out, and then we know if we want to get this done in 10 years, it means we have to buy, 1 or 2 of these buildings a year. If we want to get it done in 5 years, we know we need to buy probably 3 or 4 of them in 1 year. If you want to get this done in 2 years, you have to buy more than probably something like 10 a year, which is therefore, and then we look at it, and then we look at the point of view as how much effort does it take to buy 10 a year? Well, it's more effort than I want to do, so let's not do that. Let's stretch our goal over 5 years so that we know we can buy 3 or 4 a year. Okay, that sounds good. And then you scale towards that, and then you accomplish your goal. And any goal accomplishing in life happens that way. Most goals are accomplished in that particular way, right? You don't just stumble into goal accomplishing. It occasionally happens, but the best way to accomplish your life goals is by breaking it down, looking at the different pieces, and have them work together. All right. So if this is of value, please give us a 5-star review on iTunes. If you're watching this on YouTube, please go below, give us a 5-star review there, comment, post questions. And if you want to know more about it, there's a link below to our land flipping method for cash and cash flow. Right, with that, thank you very much. My name is Jack Bosch, and I see you in the next episode of the Forever Cash Life Real Estate Podcast. Bye-bye.
Enjoyed this episode? Then make sure you like, subscribe, and post your comments and questions below the video. We're looking forward to hearing from you.